Okay, so today we're diving into a really fascinating moment in the markets. It feels like the entire economy is being pulled in two totally different directions at once. On one hand, you've got these old world conflicts, and on the other, you have this brand new technology arms race that is just changing everything. Let's get into it. So, the day kicked off with a pretty heavy dose of geopolitical reality. There was some cautious hope for a ceasefire in the Middle East, but over the weekend, that hope just evaporated. Tensions flared right back up, and as this quote puts it, peace suddenly felt a whole lot more elusive. And you can see the market's gut reaction right here. The Dow, S&P 500, Nasdaq, all down a bit. Nothing crazy, but you can feel that nervous energy. The real story, though, is right there at the bottom. Crude oil surging almost 7%. When peace talks stall in the Middle East, the price of oil almost always tells you what's going on. Now, what's really interesting here is that while the market is definitely on edge, it isn't totally panicking. And that suggests investors are trying to look past the immediate conflict. It's like they're focused on other huge events on the horizon, especially some new economic data and a really important confirmation hearing at the Federal Reserve. And here's a big reason why they might be looking ahead. The American consumer just seems to be holding strong. We've got retail sales data coming up, and it's expected to show a pretty solid 1.6% gain. So what's behind that? Well, a big part of it is probably tax refunds. The IRS is reporting that the average refund is up over 11% this year. That's real cash going right into people's pockets, and it looks like they're spending it. But we can't just discount the conflict yet. Its ripple effects are very, very real, and they're hitting some specific industries hard. First up, the airlines. Yeah, the airline industry is feeling the squeeze immediately. Any disruption in the Strait of Hormuz, and remember, that's a critical choke point that handles about 20% of the world's oil, it just sends jet fuel prices soaring. And for an industry where fuel is one of your absolute biggest costs, that is a massive, massive problem. And to put a real number on it, just look at Alaska Air. They've actually had to suspend their financial guidance for the year because of all this uncertainty. They're expecting to pay a staggering $4.75 per gallon for jet fuel this month. That is just a huge, unpredictable cost that makes any kind of planning almost impossible. Now, at the very same time this old world drama is playing out, there's a completely different kind of battle raging in the tech sector. It's a high-stakes war for the future, and it's causing some major power shifts at the very top. And the biggest news of the day is this. Tim Cook is stepping down as the CEO of Apple. He's moving into a new role as executive chairman, and John Ternus, who's been the head of hardware, is taking over. For the most valuable company in the world, this is a monumental shift. So you'll have to ask, why the change? Well, while Tim Cook was an absolute master at growing Apple's value to almost $4 trillion, there's been one glaring weakness under his leadership: artificial intelligence. Apple has fallen behind, so far behind, in fact, that it's had to turn to its biggest rival, Google, to help power its own Siri assistant. Think about that for a second. This whole situation sets up a really fascinating contrast. On the left, you've got Apple basically tapping its hardware guide to try and solve its massive AI problem and lead a new era. And on the right, you've got Amazon, which is just going all in, doubling down with another $5 billion investment in the AI startup Anthropic. You've got two giants with two very different strategies in this frantic race for AI dominance. As if a war and a tech revolution weren't enough to keep track of, there's another huge power shift happening in Washington, D.C., and this one could reshape the entire economic landscape. So meet Kevin Warsh. He's President Trump's nominee to be the next chair of the Federal Reserve. And this quote right here, it perfectly sums up his entire philosophy. He believes the central bank has gone way beyond its original job and needs to get back to a much more limited, focused mandate. But getting confirmed, well, that's a political tightrope. While he's very clear on his views about the Fed's independence, his biggest obstacle is pure politics. A key senator has thrown up a major roadblock, vowing to block any nomination until a Justice Department investigation into the current Fed chair, Jerome Powell, is finished. So, yeah, it's complicated. So here's the bottom line. How do all of these things, war, technology, politics, all come together in the stock market? Well, they're creating a massive and really dramatic split. This chart says it all. We're calling it the AI divide. And just look at this. The valuation of AI infrastructure stocks, the companies making the chips and the servers, has just skyrocketed from 2.2 times sales to 12 times sales in just a year. At the exact same time, AI-exposed software companies have seen their valuations get cut in half. Investors are literally fleeing what they see as AI's victims and just piling into the companies building AI's foundation. For a lot of them, it just feels like a more tangible, less speculative bet. But here's the hidden risk. This rush into infrastructure has created a market of what some analysts are calling scream machines. The hottest stocks right now? They're not those stable software companies with recurring revenue, no. They're hardware makers whose businesses are famously cyclical and prone to these wild swings. It's a much riskier bet. But despite those risks, the optimism out there is just soaring. You've got major banks like JP Morgan getting incredibly bullish. They just raised their year-end forecast for the S&P 500, and they're talking about a blue sky scenario where the index could potentially hit this number, 8,000. That's especially if tensions cool down and the AI boom just keeps on rolling. And that leaves us with this final central question. We have these two powerful competing narratives: an old-world conflict defined by things like borders and oil, and a new world technological revolution that seems to have no limits at all. So which of these powerful forces is ultimately going to win out and define where our economy goes from here?